Hey, this is Danielle. Welcome to today's episode of Your Daily Five. Today, I'm going to be talking about the strong move that we've seen in the NASDAQ, in addition to multiple growth stocks and what it means for the upcoming earnings season. Now, let's just start off by looking at the QQQs. What you can see today is that we had a really nice move. So we had this wide range expansion candle. And the reason why this is important is because you can see that not only did it break the high of the previous candles, but this candle is also about twice the size of the previous candles. So what that means is that it's a move with some energy, and it's a move that can really continue on and follow through as we get into earnings season. Now, we've entered October. We're at October 6th. And what that means is that we're getting closer and closer to the beginning of earnings season. We have the banks that are going to be reporting starting next week on none other than Friday the 13th. So, we're about 1 week out from that. And then after that, we're going to see Netflix and Tesla report. And after that, of course, we will get into the rest of mega cap tech, including Google, Microsoft, and then onwards to Amazon and Apple. So let's talk about what this move in the NASDAQ means for growth stocks and the potential move going into earnings. So, today, as of right now, really strong move. Great day today overall, but can we see continuation? What we're really going to need to see is a breakthrough of this overhead area of resistance. You can see that there's level right here from where this gap occurred, right? And at this point, we've come back and we've filled the gap, but we really need to keep breaking through it. So if we can see a gap up on Monday and a break up through 365, especially if we can get a high above the high of today's candle, that would be a sign that we're seeing upwards continuation going into earnings. Now, another thing that I've talked about on stock charts, and Dave and I talked about it as well when I was in studio, is the high put call ratio and the tickers you specifically wanted to look at in case this high put call ratio ended up signaling a short squeeze. One of those tickers was Meta. Now, Meta is up 3.5% today. You can see that it has this really nice trend consolidation, and it has a daily squeeze. So typically, whenever bull move starts to take off, when we're seeing a lot of bearish price action and everybody's really short, is you want to focus on these tickers that have a nice trend, and specifically tickers that had gapped up and had positive moves the previous quarters post earnings. So because we're in that pre-earnings time frame that I like to call the hot zone, something that's really important to do right now is to look at which stocks behaved well last quarter and which ones did not, because those are going to be the ones that you want to focus on. So earnings analysis is crucial in this market environment and in this time frame. If you look at Meta, you can see that it had a really nice gap up post earnings, before earnings, had a nice rally last quarter, nice gap up after earnings, continuation post earnings. You can see that it had a rally going into earnings. You also had a gap up post earnings. So you catch my drift, right? A stock that is showing continual bullish trends going into earnings and post earnings is generally going to be one of the best ones to look at going into the next earnings report. So if you're looking at Meta and the earnings date, that earnings date is going to fall on October 25th. So anytime you're within about 21 bars of earnings, that's generally where you're going to see a nice move taking off. If you have a bullish stock and people are anticipating a nice move. So I'm looking for a trade up into 325, and then after that about 340 in this stock. The next one, which I talked about on my previous stock charts video as well, was going to be Google. Now, again, this one had some earnings patterns. You can see that you had a really nice gap up post earnings last quarter. Before that, you had this nice daily squeeze that ended up taking off after earnings. If you go a little bit further, you can see the quarter before that, you had a beautiful rally going into earnings and then another gap up. So, overall, you've had some pretty positive earnings moves in Google. So with this stock, this one has an earnings report coming up, and that's going to be on the 24th. So, looking at the way that this can keep trading along with the trend, you're looking at about 145, maybe up into 150. Might be a little bit much, but certainly up into 145 is what I'm looking for here in this stock. Next one is going to be Apple. So obviously, we're hitting on the high growth mega cap names right now. And the reason why is because these are going to be the most important for upwards continuation in the NASDAQ. When you look at Apple, I'm going to point out that this one looks different from the stocks that we just looked at because if you look at what occurred with Apple last quarter when it reported earnings, do you see how it shifted the overall trend? You had this gorgeous trend, nice move going into earnings, then boom. So this one is the most dicey out of the mega cap stocks because you had a major trend reversal when it came to earnings. Today, you did have that wide range expansion candle. You did have this really nice trend, moving higher, but you're rallying into resistance. You have resistance at 177 and a half, more resistance at 180. More resistance up here at 182. So I'm not as confident in Apple continuing higher because of these earnings patterns. But I can tell you that for the most part, still trading higher. We do have a daily squeeze. All hope is not lost. This is a stock that does generally trade higher going into earnings. So I'm going to keep an eye on it here, but I don't think it's the best one for a trade just because it is under all of that resistance. However, if we end up seeing positive moves from the companies that are reporting a little bit sooner in the season, so for example, if Microsoft, if Google start trading higher, continue trading higher going into earnings and then continue trading higher after earnings as well, that is where this one could really take off. So this one's kind of in the second wave. So keep it in mind, but I'm not going to get into it just yet. So let's talk about the first wave of earnings. Obviously the banks are first, but I'm talking about mega cap growth stocks. So Netflix and Tesla are generally going to report first, and we have Netflix coming up. Let's see the date on that. It's going to be on the 18th after market close. So Netflix is in a really strange situation this quarter because Netflix does historically rally going into earnings, and Netflix will do it, even if it's down. Like, look at this quarter right here. You had Netflix that was just rolling over and dying, and then you get close to the earnings report and whew, rallies. So, I mean, I've seen Netflix have these really strong moves going into earnings, like even if it looks like it's falling apart just before the report. So, I generally always trade this one going into earnings. But what's unique about this is last quarter, it kind of topped out, gapped lower after earnings. It's been kind of rolling ever since. At this point, you are sitting directly on the 200 simple. We did have a strong move today. It's up 2.43%. Um, so it's trying to break out above these previous highs. It does need to get through, I would say, about 385 before it could really get going. But with this one, I'm not going to put a trade on it right here. The main thing that I'm going to do is I'm going to watch it because if this ticker comes out and it reports earnings and we end up seeing a big move after the fact, what it's going to do is it's going to cause some positive momentum and upward trajectory in the rest of the growth stocks. So definitely keep this one on your watch list because of the earnings report, but I'm not going to trade it right here. Tesla is another one. Again, this is reporting earnings in the first bunch. So this is going to be very critical to see how the market reacts to it. It's going to be reporting on the 18th as well. This one has much better structure than Netflix does. If you look at the way that it reacted last quarter too, though, again, a little bit of a disappointment. You were up here at highs. You had a gap down after earnings. It's been pretty lackluster all quarter. I think the growth is slowing down a little bit with Tesla, given the ongoing macroeconomic conditions. But moral of the story here is that we did have a decent move today in Tesla, staying up above your critical moving averages, and you're just in that time frame where you could easily see a pre-earnings rally, which, by the way, historically is something that we do see in Tesla. So this one, I think trading it up into 275 makes sense, but more than anything, Tesla and Netflix are the ones to watch to see what kind of continuation move we can get into Microsoft, into Google, into Meta, and then into Amazon and Apple. So with Microsoft, this is another one that I really like to trade before an earnings report because you tend to get this really good pre-earnings momentum. You can see that, we're at least trading off of these lows here and had a nice big wide range expansion candle today. We're up 2.47%. Really nice move there in Microsoft. Um, but it's got to get through 330, okay? You can see there's a lot of resistance there. However, if it can get through 330, then that's where it could really start to rally. So this is definitely one to watch. It's also one to potentially trade if you get the breakthrough 330. Now, as I mentioned, the most important thing with the market right here is going to be if the move from today continues. So, we do have a really high put call ratio. That means a lot of people are short, and that means there's a lot of short covering potential. Okay. When you have a big day like today, market's up 1.67%, you have a lot of these growth stocks up more than 2%. That means that people are buying, but it also means that a lot of those short sellers have to cover. So, whenever there's buying to cover and also buying, it can really cause explosive price action. But you need to see another gap up on Monday for there to be continuation. So, what I want to see here is a gap up, continuation, more bullish price action. Where could this all go wrong? Well, it could all go wrong if we see a big gap down on Monday, and then why would any short sellers cover, right? They'll just add to their short positions. So, I'm hopeful for a continued short squeeze on Monday. I'm never going to say, yes, it's going to be this way or no, it's not. I trade the price action as it comes. So if we get a gap up, trade the continued short squeeze. If we get a gap down, all that means is that we just have to wait a little bit longer for the full short squeeze to come through. But either way, these are the top tickers to watch, and we're going to be right in the meat of earnings season before you know it. I'm also going to be teaching a webinar next Wednesday. So if you want to learn more about my earnings methods, about how I analyze charts, what I look at, I do all kinds of trades. I specialize in pre earnings trades, overnight earnings trades, and post earnings trades as well. So if you want to learn more about that, you can click on the link below or go to simplertrading.com/nightly. You can type in your name and your email address, register for the webinar on Wednesday, October 11th at 7 o'clock. Other than that, if you want to know more, you can follow me on Twitter at Trader Danielle, or I'll catch you in the next video.